So welcome to Richard Burton. He's our second speaker on our second unit masters program. We're very grateful to have him here. He's an expert in interface design. Also, I'm a really big fan in his ideas and concepts in terms of community governance and the future of the potential in terms of revolutionize the finance space, as well as making the flow of value more fluid and fairly distributed around the economy. So please put your hands together and welcome Richard.
Hey everyone. It's really kind. Cool. Yeah, so I'm just gonna walk you through three sets of ideas that I think about a lot, and kind of really see what you think of them all, and then open it up for a discussion. So the first idea is this notion of open source financial systems. The second idea is that of community capitalism, or more participatory capitalism. And the third idea is a frame I have for why certain projects are different. And this is the idea of like these kind of cult-like projects. So I'm just going to kind of go through these three ideas and try and weave them together at the end. And then anybody is welcome to jump in anytime with questions or ideas, or throw them in the chat. And I thought it'd just be fun to have a discussion about these and see what everyone thinks. So for reference, one of the lucky experiences I had quite a while ago, or almost 10 years ago, is I was a very early employee at a company called Stripe, which everyone's heard of now. But in 2012 was this kind of obscure little payments company in San Francisco with 23 people. And I didn't get to spend long there because I'm not a natural employee, but I did get to see what it's like when a truly amazing company gets started, right? At the time, Stripe was growing 10% a week. They had the best investors in Silicon Valley. They were adding customers kind of every minute, and the payment volume was going through the roof. And really, a lot of people talk about product market fit and like all these kind of things, but until you really see it, until you see basically near perfect startup execution, it's kind of hard to articulate just how incredible it is. And I feel really lucky to have seen that early in my career, because I think that Patrick and John are two of the greatest founders to ever live, probably two of the most well-read individuals, like and extremely thoughtful about how they build their business. And to me, it's no surprise that Stripe is on its way to being $1 trillion company in the next decade. I mean, it is just one of the most phenomenally well-run organizations, and people absolutely love it. But Stripe to me represents this idea of the pinnacle of fintech and the pinnacle of what we can kind of call closed source finance. So for those who may not be familiar, the term open source refers to software where the code is readable and editable and forkable and kind of malleable by anybody. And kind of Stripe and fintech and banks of today's ilk are the exact opposite of that, right? They all run closed source code that no one can look at. They connect to private permissioned APIs from other banks. And if you imagine every beautiful fintech app you use, from Robinhood to Monzo to N26, these are all built on this kind of rickety stack of APIs. And at the very bottom, when you dive down into the bowels, you end up with these old Fortran systems that are extremely brittle and how can I put it? They're just very they're very kind of arcane would be the best way to describe it. So I'm just moving my screen across there. Yeah, so closed source finance and fintech is amazing, right? We've had incredible developments. There have been massive improvements in the fintech stack, and you're seeing just rapid amounts of innovation in fintech, and that's really incredible. But I kind of want to go back to how Stripe began, because it's pretty important, right? Like in order for them to build their API, They needed, both to be incredibly bright individuals and to assemble the greatest investors that you can possibly imagine. And together as a kind of community and a company, they shepherded that project into Wells Fargo, who was the first bank that gave them access to the raw banking rails. And so you had kind of Mike Moritz, greatest venture capitalist of all time, Paul Graham, arguably the best kind of angel/seed investor of all time, Sam Altman, who's become, just a prodigious individual. And no, I'm not sharing my screen. I'm just talking. I want to present to people. I don't want to do slides. So he had this incredible set of people, right? And through all this work, they were able to get access to Wells Fargo's money moving API, which is like a kind of flat file uploading FTP server that's secured by a bunch of encrypted cubes in servers and things. From what I understand, I'm not a kind of fintech engineer, but that was my high level understanding. And I want to draw a line from that, right? Like this most auspicious and kind of the most incredibly crafted company, and draw a line for you all to ETH India 6 years later, where I was meeting kids building on Ethereum in Bangalore, on a totally open source, fully permissionless, decentralized network. And this 2018 was just one of these like light bulb goes off moments where I was like, wow, that is the best that a company can achieve. But this is what a community can achieve, when it's open source and available for everyone. Matic Network, was one of the teams that I met there, as well as Instadap. These kids have gone on to build incredible pieces of open source financial infrastructure, and I think it is really amazing that people in that country and all over the world are able to build on top of Ethereum, right? Stripe has been working on their India launch for many years. I believe they're in a kind of closed beta right now, but rolling Stripe out country by country has been an incredibly Herculean task, and I have no doubt they're going to do it. But again, I want to kind of contrast closed source permission finance with open source permissionless finance, which is what DeFi or decentralized finance represents. It represents the ability to write code that moves value, that anybody can edit, fork, control, remix, rewire in any kind of way. Now, kind of up until this point, the vast majority of these things have been for kind of speculation on other crypto assets, lending, borrowing, mostly so that you can get more leverage. But these things are kind of prototypes or toys for what will eventually become a kind of robust set of programmable smart contracts that anybody can use for any kind of financial interaction. And I also want to kind of remind everyone that to grow up in the West with a stable currency, a kind of ability to lend money, ability to borrow money, ability to invest it, ability to kind of save it, all these things, those are like privileges that are just like not felt by many people in the world. And one of the more stark contrasts here was how can I put it? I asked these kids in India, what's the worst interaction you've ever had with your bank? And I was expecting them to talk about, money taking weeks to move, or something not kind of working, or an app being bad. And this kid piped up and he was like, well, my family business, we tried to sell up and move out of one city to another, and the bank manager refused to release the funds until my father gave my sister's hand in marriage. And it's when you hear stories like that that you think, wow, like finance is just so brutally shit all over the world. Like it really is terrible to interact with the banking system in so many countries. And so that's kind of the subject of the blog post I wrote about why I think over the long term, over a kind of 3-decade period, open source financial systems will do to finance what Linux did to the operating system. It's not that Linux beat Microsoft on the desktop. It didn't kind of coerce Microsoft into anything. It just simply found product market fit with the Apache web server and just consumed Microsoft. Like if you told Bill Gates that Microsoft today is number one business, in terms of growth and revenue and profit, would be running Linux servers, he would have just not believed you. And I think That's one of the frames that I really like to share with people is this kind of notion of closed source finance and open source finance. So I can dive into that more later, but that's kind of the first frame we'll start with. All right, so I'll move on to the next one, which is this post I've been working on for a few months, and I posted last year on community capitalism. And my theory or my guess or my hunch or like the thing that I would be interested to debate or challenge with you is that like 1,000 years ago, probably only 1,000 people roughly kind of controlled the vast majority of the high growth capital. So we're talking about kings, feudal lords, barons, you know, inner families, Illuminati type, you know, Medici's, like the best capital in the world was concentrated in a very few number of people. And this kind of feudal lord system and where people were serfs and they had kind of no opportunity to kind of push beyond entrepreneurship was like roughly 500 years. And then there's this like transition to incorporation, joint stock companies, the ability to mix capital, people, and risk in new and interesting ways. And this just like prodigious improvement in human productivity where people don't need to be born into wealth to go and create wealth. They can be born and use some kind of admitted privilege, but their kind of ingenuity, their industry to build new companies. And so what I want to draw a line from is like capital being in the hands of like fewer than 100,000 people to being in the hands of like hundreds of millions of people. And so this continues, right? So entrepreneurs have capital, right? So, and that I think is fantastic, right? Founders can take the lion's share of the winnings, investors commingle their capital with the labor of an entrepreneur, and off you go, having all this industry. And then like the next shift is kind of the 70s, 80s into the 90s and early 2000s, which is let's actually give employees shares of the best businesses on the planet, right? So this began with Wall Street finance, but really got taken into account in Silicon Valley. And I think is one of the reasons that Silicon Valley's created multiple $1 trillion of capital is because all their employees were incentivized to make the thing work, right? And so what you're seeing is like hundreds of thousands to millions of people controlling the means of production, like having access to the best, highest growth, most amazing businesses on the planet. There've always been community banks and like community, retail stores and like other kinds of communal businesses, but normally, quite frankly, they're just shit businesses. And like you have a share of a incredibly low profit organization that's not growing that much, and it's like, not actually meaningfully changing your life. And so this thread is now really, really going into overdrive, in my opinion, with two things. Is the SEC has made a proposal to allow gig workers to earn capital. And so that means that, the first 100,000 Uber drivers, the first 100,000 Airbnbers, first 100,000 DoorDashers could have all earned part of their salary in illiquid equity in the organizations they were assisting. And I think what we're going to see is competitors to all the largest marketplace businesses starting at low valuation who will now take advantage of this rule and say, hey, we're doing Uber, we're doing DoorDash, we're doing Airbnb, but you own a share of this business. And if we have anything like their success or even 10% of their success, we can all win together. And so this is just like pointing a straight line towards, worker and gig worker owned capital, right? Where not only is it the founders, not only is it the investors, not only is it the employees, but it is the part-time workers of these companies that are now accumulating capital and will be seeing enormous upside to these new organizations and marketplaces. But then there's another step, right? Which is where you want your users to actually own a piece of the capital. And like that, I think, is where Ethereum has shined, right? Is like everybody who gets involved with any of these decentralized financial protocols, who uses them, eventually gets rewarded in tokens. And most of these tokens, I think, will kind of disappear or die or implode. But the number of amazing experiments we're seeing is fantastic. And this is so different from 2017, where you had lots of people buying ETH on a Coinbase, sending it to some random person in the middle of nowhere, and kind of getting some shit coin back that imploded. Now we have people raising really small amounts of capital, building services that have billions of dollars flowing through them. And then the users of those services, whether it's Uniswap or 1inch or you know, any of the kind of Compound or any of these huge protocols, the users are then getting rewarded. And so not only do you have the founders, not only do you have the investors, not only do you have the employees, not only do you have the kind of part-time workers for these protocols earning a share, but you have the users earning a share of the capital. And the reason I think this is really important is it just means like more people can make life-changing sums of money. Like you never really get wealthy by working a salary, right? Like you never get ahead because capital is just accumulating and compounding while you're getting trolled here. It's Rick Astley. I'm not sure how to remove that. That was a bloody good troll. Thank you very much, whoever did that. Cool. So yeah. So that's the second frame is my somewhat naive and hopeful, you know, shot across the bow of the narrative that the world is getting less fair. Is I actually think on a planetary scale, the world is getting more fair. I think that in countries, Western democracies, it can get more challenging, right? The wealth gap is getting a lot larger, but you know, 2020 is a pretty good lesson that if you just have assets, you're pumped, right? Everyone gets pumped, and if you just have wages, you're either fired or you're fucked. And I think that's terrible, right? Like I, you know, just the gap between those who held assets and those who just have, you know, regular wages last year just got like another 50% worse. I mean, it's just horrendous what's happened in the last year. So yeah, and then I kind of also want to draw a line here between Ethereum and Stripe, right? The founders of Stripe still have like 30, I think 30 roughly % of the business. Like Vitalik and Joe have like 0.3 and I think roughly 3% of Ethereum. So there's this incredible effect when capital is more widely distributed that it actually multiplies because more people are incentivized to get out of bed earlier, to go to bed later, to work harder, to, you know, they look at their child in their cot and they think, fuck it, if I actually really put my nose to the grindstone, I might be able to put this kid through college and like feed them. And like when you own capital, you just do work harder than if you have just wages. I think that's like a kind of incontrovertible truth, but I'm welcome to being challenged on all of this. I'm not a historian. I'm not an expert. This is just a frame. This is just a lens, and it could be totally wrong. And if you want to come shatter it for me in the questions or whatever, I appreciate it. But I think this is like a frame that's reasonable. Cool. So yeah. Sorry if anybody had a question or wanted to interrupt. Happy to take a pause here.
Yep. So I totally agree with what you're saying. Like, I think this idea of cooperative stakeholder ownership is inevitably the future. Like, I think, you know, what you described in terms of the idea that even a project like Zoom, which did incredibly well this year, there was a very small number of people who benefited from this immense value creation. And it's so exciting for the future where, you know, you walk down any small street in a small village or a big town or a big city, and they'll have a portfolio of like their friends, businesses, their friends' organizations, communities, a local supermarket, a restaurant, you know, a musician friend. You know, you won't just say this is my friend who I've got a stake in.
I'm somewhat interested in that, but in general, like I wouldn't want to own any of my friends or restaurants or like music or any. Honestly, those are all just like not likely to be the best businesses, right? They're just not. What I'm much more interested in is how do people get a share of the best businesses, the best projects, the best protocols, the highest growth technology? Because I'm not going to be able to grow my wealth by owning a piece of like a restaurant, right? It's just a terrible business. Every time restaurants are like first things to die in any small business pushback. So while I'm interested somewhat in kind of community level tokens and things like that. In general, those people, those communities, they're creating amazing social interactions, amazing human bonds, amazing connections, nourishing food and all that stuff. They're not creating capital. And like, I'm much more interested in like, how do you get people who use the most interesting software projects in the world, the most high growth technologies, a share of the upside? And that's specifically what I care about with community capitalism, not not like communal capitalism where everybody's got a little bit of their village, because your village is likely to be, very unproductive. Anyway, that's just how I feel about it. I mean, yeah.
I guess two quick questions. One is like, when did you see this benefit in the idea of like cooperative ownership, not just the founders and the investors having a stake, but also the customers and the employees having a liquid stake? First question. And the second one is, how do you feel about projects like you mentioned, very popular apps like Uniswap or 1inch Exchange, like things like this? They don't generate profit or have underlying assets compared to traditional companies like Stripe, which generate.
That's not true. I mean, that's just incorrect. I'm sorry, but Uniswap is doing more volume than Coinbase on a good day, and LPs are earning fantastic sums of money on a daily basis. So I just strongly disagree with that assertion. It's way more capital efficient. Uniswap is growing kind of geometrically. 1inch is growing geometrically. I'm surprised that Uniswap's so cheap, quite frankly. I mean, it's Coinbase is going to go out the door at 100 to 150 billion dollar valuation. They have 1,500 to 2,000 employees, and Uniswap has I think 9 people, and they do more volume on a good day. So I reject that assertion. I'm afraid. Sorry.
I suppose I guess the point I was making there is currently the token isn't backed by any of that value. So you mentioned like the
but that's all getting voted in this year, right? The reason none of these tokens have cash flows is because of regulatory capture. So what you do is you launch the token and then you say later on, oh, it was the community who voted in the revenue. I mean, all these protocols are getting investigated by the SEC, FATCA, like, every regulator and their dog is like, how did you build something that's comparable to the NASDAQ on a good day? That's just a smart contract whilst you're sat in the middle of New York. You don't move hundreds of billions of dollars around without getting some serious pushback from regulators. And maybe not even pushback, just questions. So you also are slipping into the mental frame of comparing tokens to equity. Like, just because Uni's value right now is that it governs value, right? Uniswap is the most valuable thing that Ethereum has ever created in terms of just the sheer dollar volume that's going through its smart contracts. And so to have an influence on that, to accumulate Uni, to hold a position, is to govern value. Governance tokens value is that they govern value. The cash flows are coming 100% because everybody's going to govern them in. The incentive of all the holders is to govern in the profit sharing and the buyback. It shouldn't all be going to the liquidity providers or the arbitrages. So I think that it's being priced where it's at because it's globally available, community-owned infrastructure. And I think that honestly, DeFi is, I think, massively underpriced. Right? If you look at the whole crypto market cap, DeFi governance tokens and various cash flow tokens represent about 2% of that. And I think that it won't be a sensible valuation until it's 40% of crypto market cap. So I think we've still got a 20x run on all the existing projects, never mind all the ones that are coming to be launched.
Amazing. And I guess in terms of like, quick question, when did you realize that this was like super interesting? What was the moment when you're like, okay, DeFi, like the idea of not having to rely on centralized exchanges or
yeah. I think the biggest moment was when I started living on a CDP. So I put a chunk of my ETH into a MakerDAO collateralized debt position, or known as a Maker Vault now. And I took out a DAI denominated loan to pay my living expenses. And it just was the best, transaction I think I've ever made, because I kept exposure to ETH, but I lived on dollars. And then I went down the Maker rabbit hole, and I was like, wow, this is unbelievable. Like, Maker have created this stable coin called DAI, or DAI, and it's really usable. And anybody who's developing on top of Maker can kind of use that stable coin and that debt facility. And then I started seeing, other protocols create lending markets. So now I put some of my ETH into a lending market, and I pay my rent each month with the interest I earn from the lending market. So I think that, and then I started moving more of my assets over from traditional finance over to DeFi. And now I think I'm like 95% in DeFi, and I get better interest rates. I kind of get easier access to loans and capital, Trading is a lot simpler. I don't do many trades. I do about 1 or 2 a month. And I don't have to deal with, Coinbase and all the issues that come with that. And I started realizing that this user experience is not only enjoyable, it's better than going and working with a bank. Like if I wanted to get a loan against my Ether holdings from a traditional bank, they would just tell me to jog on. So I think it was when the experience actually got better than traditional finance that I was like, oh wow, this is amazing. So yeah, that's how I feel about it.
Amazing. And I guess taking a few steps back, like what was it like when you first got involved in Ethereum or involved in Stripe? Did you feel that it had the potential, or I guess to hear a bit of your background, have you
Yeah,
always technology, or like maybe you could
yeah,
explain
sure.
where you're from, like
Um,
did you study
Yeah,
any?
yeah. I'd like to emphasize that my early involvement or contributions were extremely minimal. I think the only good thing I did at Stripe was hire my best friend, who was way better than me, which is probably part of why they let me go. And at Ethereum, very minimal as well. I really was just there around in Silicon Valley. But this kind of leads us really nicely, Michael, into the third frame I'd love to share, which is this notion of aliens, Jedi, and cults. And it's my thing that I go on about all the time, and it's a bit of a joke, a bit of a meme. But after Stripe, I kind of had this very strong impression from the Collisons that I'd been around two of the smartest people on the planet. You are aware that they are operating on a kind of cognitive frequency that I couldn't reach even if I had a gun to my head. And the next time I kind of felt that way about somebody was when I met Vitalik in Silicon Valley in 2014. And this kid was learning Mandarin on his phone, talking to me about design, chatting to someone else about protocol engineering, and I was just like, this kid is on another level. And I started to kind of form this jokey theory that there's over the last few years, which is there's the alien leader, right? And in Stripe's case, it's Patrick, and Vitalik, in Ethereum's case, it's Vitalik. And then they assemble this kind of set of Jedi around them, just like the early Stripe team were just absolutely on fire. Amazing individuals, incredible engineers. Same with Gavin Wood, the CTO of Ethereum, and the people he assembled. And then these things are not companies or like open source projects, they're cults, right? You cannot get the best people to work for you for money, because like the best people, they just make so much money anyway. They don't need to worry about that. Like the best engineers in Silicon Valley are not getting up every day and grinding because they're interested in money. They're like trying to build something and they really care about, and you can see cults everywhere, right? Apple is a cult of sorts. Tesla is definitely a cult. If you go to the factory in Fremont, which is 45 minutes from where I live, you go there at 4 a.m. There are cleaners, cleaning up at 4 a.m. because they not only own stock, right? They're community capitalists, but they also believe they're cleaning up for the creators of the Green Revolution. And they think that that's going to save the planet and make the world better for their children, right? That's why Wall Street keeps misunderstanding Tesla, is because cults are willing to look over all the accounting issues, all the crazy acquisition things they've done, all the management failures, all of the manufacturing issues, and just say, fuck it. Like, I want a green car to exist. I'm willing to finance this with an absurd valuation, 600 billion valuation, is basically telling every oil company just to like fix this, or every other car company cannot ignore electric anymore. And so when I'm looking for new things to work on or work with, I'm kind of looking for this alien Jedi cult mental model. It's like, and the one that really worked for me last year, which I kind of identified a couple of years before, was the Graph protocol. Okay, Yaniv is a fucking alien. He's just one of these people that sees the future, but can also engineer in the present. He's got an incredibly articulate way about him. He assembled these amazing engineers around him to build what is essentially the data layer of Ethereum. And they basically fixed one of Ethereum's biggest problems, that getting data out of it is really hard. And then he got this kind of cult-like community with the Graph protocol, with every single kind of decentralized application building on top of them. And Graph has been one of the most stunning successes by any measure over the last kind of few years in Ethereum. So if there's anything that I've done well, and my own projects, I'm actually not a good CEO or a business builder or anything. I've tried to do these things and failed miserably. I actually experienced community capitalism by raising $1 million for a wallet company, while everybody else did token sales. We did a kind of crowdfunded safe. And I couldn't make the wallet business work because all my competitors had either sold a token or sold to an exchange. And so I had to wind that project down and go back to what I know, which is finding kids with a lot of potential who seem to be kind of mission driven rather than mercenaries, and seeing if they can kind of create this intangible quality around their project that ends up making it kind of cult like. And the one I'm obsessed with right now and working with is Fae Protocol with this kid, Joey Santoro. He's just everything you could want in a young founder. I mean, 22, full of energy, totally focused, 100% dedicated, and building a new kind of stable coin on Ethereum, which is the biggest market in Ethereum. We've gone from $500 million in stable coins to just over 30 billion in less than 18 months. And so, yeah, that's the third frame. And I'd really just like to open it up to questions. So to recap, we kind of went over open source finance versus closed source finance, community capitalism, and why I think more people should own the best businesses or the best, technology projects. And then finally, I think what it takes to build something amazing. And I think it's got to be a kind of cult-like project with an alien leader assembling a bunch of Jedi to go on a mission. So that's my weird brain, how I think about things. Frames are only as useful as they are rewarding. So we'll see if I'm right over the next few years with these 3 frames. But if anyone wants to chat about them or have questions or discuss, or if anything, if none of this has made sense, then thanks for bearing with me. I'm happy to chat. So yeah.
One question from IANRM on another, what blockchain is best suited to the establishment of financial instruments? Cardano, Ethereum, or how do you see others or this coexisting?
Yeah, so let's take the alien Jedi cult frame. Charles Hoskinson is absolutely not an alien. He is an extremely egotistical and difficult man to be around. And if you go read a bunch of his interactions online with other people, he is not someone who can win the loyalty of truly great engineers. He might be able to pay people, but he's not great. He was kicked out of the Ethereum community for very good reason. He viewed himself as a kind of Steve Jobsian-like figure when his abilities were more like that of a kind of teenage engineer. So I have zero interest in Cardano. I mean, the people they raised capital from were Japanese retirement funds. If you look at the concentration of the tokens, it's ridiculous. And generally the people involved in Cardano are just Haskell nerds who are frittering away in their own corner of the internet. So my focus on Ethereum is because it encapsulates every single frame we've discussed here, right? There is a community of people who own it, not just a concentration of venture capitalists. It has an alien founder with a bunch of Jedi who got it going. It's more of a cult than it is a protocol, and it just points towards how open source finance could be. There's a reason that 99% of DeFi activity is on Ethereum. It's not even close for anybody else, and I'm not going to spend even 1 iota of energy wasting it on anything that's not Ethereum. I'm open to totally new ideas or things beating Ethereum in interesting ways, but I haven't seen a single truly bright engineer working on an Ethereum, non-Ethereum based project, with the exception of Polkadot, because Polkadot has kind of Gavin's mystical quality to it, but I'm not an expert on Polkadot. That's the only one where I've seen people truly at the front cutting edge of decentralized technology and open source finance actually doing any work. So we'll see.
Amazing. That's really amazing. Thanks so much. And in terms of like the next few years, like the next year, 3 years, 5 years, like do you have any thoughts of where this could be headed, or like what you're excited about?
Yeah, I mean, in terms of capital in the system, I think probably 3 years we'll get to $1 trillion. Right now we're at 15 billion from a standing start 2.5 years ago. I think that this becomes like a government level issue in 3 years, just when the amount of money starts going exponential. Bitcoin is just a kind of quaint gold rock that kind of floats around and moves up and down, but it doesn't challenge like the actual fabric of Wall Street or how capital is accumulated or managed or allocated. I think that we will see DeFi protocols strip past fintech companies in valuation, usage, capital, probably by 3 years. Hard to really say. But I think it's interesting that Ethereum reached $100 billion valuation several years before Stripe did, which speaks to the power of network effects. And I'm very long and like bullish on Fei protocol, Aztec protocol, Graph protocol, and Hashflow protocol. Like those are the four where I've accepted kind of the advisory roles, or I've invested and I'm putting my time and energy to helping those founders and communities win. And I have, extreme bias there, obviously, but I also have turned down enormous number of scams and bullshit projects, sifted through, just the absolute feces and detritus of token ideas to find, teams who actually seem to care about building something useful for society. So yeah, those are some guesses, but fuck, I mean, I couldn't have predicted any of this in 2017, and here we are in 2021. So take my predictions or guesses with a grain of salt. So yeah.
Question for Alex: what do you think community capitalism looks like in social media context?
Good question. I think that I think the really interesting thing with Jack and Mark banning Trump is they just loaded the idea of censorship resistance into like multiple billions of minds. I mean, basically everyone had heard that people can be removed from Twitter or, popped off Instagram, or, I think generally people are aware that you can have your Facebook account banned, right? But to remove the sitting president of the United States from the most important digital platforms on the planet, and to watch this kind of litany of other tech companies follow suit, I think has basically seeded the idea of inert, neutral, protocol-based software services into just the entire planet's consciousness, and they have sowed the seeds of their decline. So I don't know how social plays out at all. I keep tweeting about it because I want kids to show me the future. I just know that young people are building brand new kind of fun, arty, socially, like earn money, kind of whatever I don't know, products that are built on Ethereum, and where they know that even if their company fails, that all the data lives on. And it feels like we'll look back in 2030 and go, oh, that was it. Photo tagging was the thing that really hooked people into Facebook and got the flywheel going. There's probably something with earning or sharing or making money as a social entrepreneur. I can't really put my finger on it, but I'm waiting for a kid to show me it. That we'll look back on in 2030 and just be like, oh, that was the hook. That was how, a social protocol got built. I want censorship at the client level. Like I want my app to be able to say, I want to censor racists, bigots, Nazis, like bink, but I want the data behind it to be as just the free flowing everything, everything can be posted, because that's the way the internet works, right? You don't prosecute Gmail for child porn arriving in somebody's email inbox, right? The data flows free because email is a protocol, but the client is able to censor it, right? Gmail does screening for child porn, and I think that's an appropriate way for things to work. It's the problem is we didn't have the technology to do social protocols. We almost do now. It's so close. So that's how I think about it.
Amazing. And a question for Alessandro, related to community capitalism ideas. Have you heard of the concept of exit to community that seems to be aligned with your description of growth for redistribution?
Yeah. One of the things I don't like about that term is it implies that everybody who's built it leaves. So I just think exit to the community is it's a clever phrase where it shows that there's a third path, right? Before, if you're a founder of a software company that raises venture capital, you've got to get acquired, you've got to go public, right? And that's just an enormous range of things that can go on in between those two. With crypto protocols, Compound and Graph, have rendered their teams, multi-millionaires within years, and their community are involved in the protocol, and they haven't had to go public, and they haven't had to sell to another company. We're going to have about 100 founders who will be, making 9 figures with launching their protocols over the next 2 or 3 years. And I don't care about individuals necessarily making money, but I do think that it's an important signal that society, the market, and capitalism is rewarding creating community-driven protocols. So exit to the community is an interesting idea for sure, but I think it might be one of those phrases that can be misconstrued. I think it's much more interesting when you have kind of community ownership increasing, basically, and that I think is how the best ones are designed, right? So we'll see, but I think it's a very interesting phrase and term, but could do with some work, in my opinion.
And a question here from Jonathan just came. You aren't a designer or a software engineer. Where is your fit in a startup?
I think there's tons of fit. We have people who are involved in community. We have people who are involved in operations. One of the things I like to say is that it's easier to teach a competent person about crypto than it is to teach a crypto person how to be competent, right? There's just so many freaking morons in this space, and so many scammers and so many idiots. In general, if you want to do a non-technical role and join a project, the best way is to get in the Discord and just help the founders deal with all the inbound, look at like what's coming on, like answer questions, learn about the protocol, use it, give feedback. And probably the best example of this is DeFi Dad. He is not an engineer, he's not a designer, but he used every single DeFi protocol and made a video about it. And now he's, got an amazing job. He's made an absolute fortune. He loves sharing his knowledge, and he learns. And because he's not technical, right? Because he's not a designer, because he's not an engineer, he has great insights because he looks at everything from a kind of very user-friendly lens. And that's just one of the many examples. I mean, my friend Rita has been helping out with Faye Protocol. She is just a phenomenal editor. I mean, I look at a blog post and I'm like, yeah, that's all right. And she looks at it and she's like, it could be structured this way, you could phrase things. So they're just as in real business, right? There's not just the engineers and the designers, it's the operators, it's the accountants, it's the human resources. The same things apply to all software projects. It's a people business. It's a people based project, right? The protocol reflects the people who make it, and it cannot be just designers and engineers. Otherwise, nothing will get done, right? No one will get paid. Nobody will be managed. There won't be any support given. There won't be any integrations done. Business development is a huge thing. So I think all the similar kind of roles in tech map over to protocols in interesting new ways. And if anybody is interested in working in the space, like just DM me anytime, and I'll do my best to point you towards interesting things. And just you got to run with it and see if you like it. It's different kind of work though. You're not kind of joining a big tech company. You're kind of becoming part of a community, and then kind of rewards come a little later. But yeah, there's lots of opportunity.
Amazing. A question here from Philip Lingard. How do you see the Chinese blockchain operating? Is it parallel, opposite, or capable of convergence with community capitalism?
Yeah, it's a great question. I mean, censorship resistance is probably as antithetical to Chinese culture and political culture as possible. I've never visited China. I only have a very high level understanding of what it's like there. I have zero expertise and zero kind of knowledge on the ground. Quite frankly, I don't want to ever visit that country. I just think what they did to Jack Ma by silencing him and nationalizing his payments company is one of those events that just makes me terrified to even visit such a place. So I probably can't comment with any level of depth or clarity, or quite frankly, any Western bias, because I just find China to be extremely distasteful and like against everything that I believe and hold true. But I do think that when uncensorable technology smashes into Chinese political ideology, we're going to have some interesting battles. I think that if Bitcoin mining becomes a national security issue, that's probably what sends it to $1 million and more, because Chinese miners keep undercutting miners everywhere else by getting cheap subsidized electricity. That's what I've heard. Again, I'm not an expert. There's funds like Dragonfly, you have people on the ground, and others who are just deeply steeped in Chinese culture. I am commenting from a 1,000-foot view on something that's happening on the ground, and I just find it distasteful even from that level. So I'm not sure I can give you the best answer, but those are some random thoughts strung together.
Amazing. A question from me. Based on what you have seen so far, what are the most amazing projects that are worth watching, not from the wealth creation, but from creating mechanisms to solve real world problems?
Well, I believe that wealth creation is solving a real world problem, and like the reason I think um, DeFi is important is quite frankly the place I want to get to is where I can seriously go to my friends who work in humanitarian aid and say, I've got something for you. So all my friends who work in projects in different African countries where there's massive turmoil, when you talk to them and you ask them, what do you need? The first thing they say is water. The second thing is financial services. So like before the tents, before the like food comes in, before like almost anything else, like we just need to get them water because that's the most important thing. And then before even food, we need financial services to account for everything. And I am close to the point where I feel like I could say to some of my friends working on these projects on the ground that the tech that we have in Ethereum can deliver something great for them. And so the things that give me really heartwarming examples are like USDC being used in Venezuela, DAI being used as a backing rail for one of the largest payment apps in South America, Ghanaian farmers using maker loans to kind of get access to capital. Like these are, use cases that represent less than 1% of what DeFi is right now. DeFi is largely a casino, but they point to what happens when you make financial services globally available across the internet. So I just fundamentally believe that if anyone in the world with a smartphone and an internet connection can access any kind of financial service anytime, 24/7, and edit it and change it and update it and make it to their own needs, that you're just going to get better services for the planet. And that is exactly what happened with Linux, right? Linux created an open source operating system that anybody can use any time of day, anybody can fork, anybody can do things. And what do you get? Just a flourishing of activity all over the world. And then you get things like Android and crazy smartphones and weird TVs and everything. And just Linux permeated into everything. And I think that DeFi will do the same. But that's my guess. Again, I'm extremely optimistic by bias, but everything I see just gives me kind of reason to be optimistic, despite things being so challenging.
Amazing. We have a question for Emerson. What is your view on the impact of DeFi on remittance services, RAS?
Well, one interesting thing is that Forex markets are going to get a really big drubbing by DeFi protocols. So one I backed called Shell, and there's another that's really large called Curve. They do stablecoin to stablecoin transmissions. And so you're going to see just like Forex activity is going to get done much more cheaply on Ethereum than fractured Forex markets that require regulators. So I expect to see remittances getting cheaper. I think the big bellwether will be when TransferWise actually do something in that space. They're probably 2 or 3 years away from being forced to do it. They've been talking to me and others about it a lot. They understand what's going on, but it's not worth their time and energy right now. But I think probably their hand gets forced in 2 or 3 years. There's also a great question here from Niraj about EIP 1559 implementation. And I'll just explain it at a high level. This is an Ethereum improvement proposal, as far as I understand it, to create a new kind of fee market on Ethereum that will burn the ether used in smart contracts. And so not all of it will be going to miners. I may be misrepresenting exactly how it works, but my understanding is this would create an enormous deflationary kind of sink for the ether asset. And so every time you do a DeFi interaction or you send money on Ethereum or you do something with a smart contract, the gas you pay in ether will be burned or in part burned, not just handed over to miners. And I think that has a hugely positive effect towards the Ethereum protocol because people are then paying for their usage, and Ether is not just inflating, it's actually being deflating by usage. So I'm pretty excited about EIP 1559. I could have butchered the precise nuances of how it works because I'm not a protocol engineer. I just kind of read blog posts, but that's how I think.
There's a question here from Ray. Do you think there are certain areas within DeFi that are more compelling than others for medium-term growth and helping the needs for society?
Yeah, definitely. I mean, I think that most of this yield farming kind of speculative casino-like stuff is pretty much just not that useful for society. I think that stable coins have already proven themselves to be enormously useful to people. It turns out that if you've got, a few $1,000s worth of wealth, you don't want to denominate it in Bitcoin. You want to denominate it in dollars, right? If you've not got much money, you want the cheapest transaction costs and the least volatility. And so, Bitcoiner's vision of this being a revolutionary asset in general is not proven so far. I mean, there are plenty of people who probably disagree with that. But if you talk to people in developing countries, as I have on many different calls, they're just like, how can we get access to dollars? So it is pretty ironic to me that the number one killer app of crypto really, it might be the dollar. That I think that would be a charming turn of events and drive Bitcoiners insane.
And I guess, what's one piece of advice that has helped you in terms of your journey in the past, like 10 years or 15 years? Like, what's one thing that's kind of stood out and kind of helped you?
Yeah, good question. Let me think about that one. I guess the biggest shift for me was when I went from kind of consuming stuff to like kind of creating things, getting ideas out of my head. I think that shift manifested itself in two ways. Is on the design side, I did this course called hackdesign.org, and it just changed my life. Like I got to get ideas out of my head and onto a screen. And then the other thing is just using Twitter. Like I really don't think too hard about the tweets. Like when the thought comes, I just try and format it in a little sentence and just hit go and like don't overthink it too much. And through those, short sentences of ideas, I've been able to get my visa. I've met my best friend. I've grown my network like 100 times. I've, got my, best investment I've ever done came through Twitter. So I guess shifting out of a consuming a feed mindset to like putting something out there in the world, however small, has definitely helped. I guess that if that's a useful frame, I don't know.
Amazing, thanks. So, and I guess another question is, like, what's your personal vision for the future? Like, what would you like?
Well, I was thinking about this. Like, if we're all, I went to the Internet Archive for a presentation from Lawrence Lessig before the pandemic, and a whole bunch of people there were like the early internet pioneers. And there are all these crusty old buggers that you don't know their names, like you don't know who they really are, but they're the ones that like laid down all this infrastructure that allows us to have this conversation today. Um, and I kind of love that idea that there are these like anonymous infrastructure builders, that these pioneers. And so if I was to kind of think of like what will that look like for decentralized finance in let's say half a century when I'm kind of 82, um, I just love the idea that maybe like half the world's assets are flying around on some of these protocols or something. Just monumental societal level upgrade to financial software that is just like you can just draw a line in history back to when Ethereum got all this stuff moving. And I just hope that would create more capital for more people. But I mean, I've never really been good at that kind of grand visionary stuff. I think it's very easy to have like big visions. And Sam Altman tweeted this and it kind of stuck in my brain. It's easy to have vision. It's a lot harder to have plans. So I'm just trying to make some plans. And my plan right now is to like help the most compelling DeFi founders who are in the Bay Area and hopefully that helps. We'll see.
That's awesome. And I guess maybe final question here. Thank you so much for your time, Richard. What have you seen to be the most important element of founder relationships?
Yeah, cool. Well, I've been through all the negatives of that. I have been, I think, not a very effective CEO, but I also have worked with people I don't think who are very ethical themselves. And the number one reason startups fail is because the founders either give up or stop getting along. So the best co-founder relationships I have seen are kind of built on a mutual respect and a mutual understanding of the world, and what Paul Graham kind of calls something that binds them together that's more than the startup. So in the Collisons case, this is the fact they're brothers. I think with Joe Lubin and Vitalik, who are still cranking away on Ethereum, and in many ways kind of represent the business and the tech side of Ethereum, they have a profound level of respect for each other's kind of grand worldview on economic engineering, and great kind of founding team relationships. I think put aside many differences in order for the greater good. And I think poor or deteriorating ones, and I believe that's kind of 95 to 98% of co-founder relationships, end within a decade because either the business dies or they just simply stop working together. So it's the default for founder relationships to decay, right? It's like you're in the majority case there. It is truly rare and magical when you see people who might be ending working together for 5, 10, 15, possibly 20 years to build something impactful. And it doesn't happen often, and I think that's because in some ways co-founding a company is as hard as co-founding a marriage and a family, then multiply it by 100 because of all the people involved. So I don't know, those are just some rough frames. I've certainly been on the bitter end of not being able to make co-founder relationships work, but I've also seen the pleasant side where the magical side where these things are like alliances. Yeah.
I guess final question, Richard, what was your happiest moment? Like with all your with that sort of experience, like what was the moment where you're like, wow, like this was something that made me really happy and go.
Yeah, it's a good question. I love kites. If it's not work related or family related, it would be like this moment I had like last year kite surfing in Cornwall, where I went out in, I don't know, 40-mile-an-hour winds, 20-foot waves, and I rode it perfectly for 2 hours. I mean, I got off the water and I like had people just standing there, like kind of bemused by what just happened. And like, I text my parents being like, that was 20 years of work. Cause I've been kite surfing for like 20 years. I've been grinding away at it and I'm still got a lot to learn, but like that 2 hours was like pure flow state. Like it was just the best. And that's what I'm looking for in my design or business or any of that work. I'd love to like reach that level. Because I think good things take like decades actually to get good at. Like I'm 20 years into kiting. I'm starting to get okay. I'm only like a few years into fighting and I'm rubbish at it. I'm 1 year into surfing. I'm terrible. 10 years into investing, and who knows if I'm any good. I think I've beaten the market, but who knows if I can anymore. I'm 10 years into business and mostly it's been a total disaster when it's been me involved, but thankfully the other things have made up for that. So I guess the happiest is when you're in the flow state, and I don't think you get that in its purest form very often. But in terms of contentedness, I feel more and more content each year because I think I'm doing right by my parents, my family, and my friends, and my people who've invested in me and other things. So I feel much more content each year. But happiness is like one of those spiky things that's harder to catch, I think.
Amazing. Well, thank you so much, Richard. Super grateful and appreciative for like sharing your insights and thoughts and advice.